Welcome to Explain the Charts. Today, October 15th, we're diving deep into the AUDUSD, the Australian dollar versus the US dollar. We'll break down the latest news and events impacting the currency pair, including global economic developments and any recent statements from central banks. Let's start by looking at the current market sentiment surrounding AUDUSD based on headlines from top financial websites and Google search results. There's a lot of discussion around the Aussie dollar's recent decline, with several analysts mentioning the 0.6700 level as a key support zone. Many are questioning the direction of AUDUSD, wondering if it's going up today or if it's a buy or sell situation. The general consensus seems to be that AUDUSD is facing some downward pressure, but finding support at 0.6700. Now, let's turn our attention to the charts and see what they tell us. Here's the daily chart for AUDUSD, showing us the overall picture of the currency pair. The chart reveals a fascinating story, with several key price levels and potential support and resistance zones. First, let's focus on the recent price action. We see a slight dip in the past few days, but it's important to note that the price is still trading above the 0.6700 level. This suggests that the support zone is holding strong for now. Looking back further, we can identify a strong bullish trend that began in June of this year. This trend saw AUDUSD rise from the 0.65 level all the way to the 0.69 level. However, the price experienced a significant reversal in June, indicating a possible shift in market sentiment. This reversal brought the price back down towards the 0.6700 level. It's crucial to understand the reasons behind this reversal to predict future price movements. Could this be a temporary correction, or is it a sign of a long-term bearish trend? The answer lies in carefully analyzing the news events and economic data that coincided with this reversal. To shed light on the reversal, we need to switch to the 1-hour chart to get a better view of the shorter-term trends. The 1-hour chart gives us more granular insights into the price action and allows us to analyze individual candles. Looking at the recent candles, we can see a series of red candles indicating a bearish trend. This trend intensified around the beginning of October. The price has been consistently dropping, indicating a shift from the bullish trend we saw in the daily chart. Now, let's try to correlate this short-term bearish trend with the news and events. If we look at the recent economic news, we see that the Reserve Bank of Australia, RBA, has recently held interest rates steady. This news could be contributing to the bearish trend in AUDUSD, as investors may be anticipating a more dovish stance from the RBA in the coming months. Additionally, the US dollar has been strengthening against major currencies, including the Australian dollar. This strengthening of the US dollar is likely being driven by recent positive economic indicators in the United States. The combination of a potentially more dovish RBA and a strengthening US dollar could be leading to the downward pressure on AUDUSD. Therefore, it's important to stay informed about the latest economic data and central bank statements to gain a better understanding of the forces driving AUDUSD movements. Remember, trading is a dynamic game, and the key to success is to adapt to changing market conditions. Now, let's zoom in on the 1-hour chart and examine the price action in more detail. The 1-hour chart shows a clear pattern of lower highs and lower lows, further reinforcing the bearish trend. The price has broken through several support levels, suggesting that the bears are in control. The recent consolidation around the 0.6700 level might be a temporary pause before the price continues its descent. However, we need to be cautious. This consolidation could also signal a potential reversal, especially if we see a surge in buying pressure. To determine the likelihood of a reversal, we need to look for other technical indicators that could signal a change in trend. One indicator we can consider is the RSI, or Relative Strength Index. The RSI measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the market. If the RSI dips below 30, it could signal an oversold condition and increase the likelihood of a bounce back. On the other hand, if the RSI remains above 50, it suggests that the bearish trend is still strong. The RSI, combined with other technical indicators and news analysis, can provide a comprehensive picture of the market and help us make informed trading decisions. It's important to note that the 1-hour chart only provides a snapshot of the short-term trend. To gain a clearer perspective on the potential trajectory of AUDUSD, we need to compare it to the daily chart. The daily chart shows that AUDUSD has been trading in a range between 0.65 and 0.69 since June. This range suggests that the price could be consolidating before breaking out in either direction. The key to determining the direction of the breakout lies in the news and events that will unfold in the coming days and weeks. For example, if the RBA surprises investors with a more hawkish stance, we could see a surge in buying pressure and a breakout to the upside. Conversely, if the U.S. economy continues to outperform, the U.S. dollar could strengthen further, leading to a breakout to the downside. Keep in mind that market sentiment can shift rapidly, and it's crucial to stay flexible and adapt to changing conditions. Now, let's shift our focus to the 15-minute chart to analyze the very short-term trends. This chart allows us to identify potential entry and exit points for short-term trades. Looking at the recent candles, we can see some volatility but no clear direction. The price is hovering around the 0.6745 level. This level could act as a temporary support or resistance zone, depending on the market's reaction. To identify potential entry points, we need to look for candlestick patterns that could signal a change in momentum. For example, if we see a bullish engulfing pattern, it could be a good opportunity to enter a long trade. Conversely, if we see a bearish engulfing pattern, it could be a good opportunity to enter a short trade. However, remember that candlestick patterns should always be used in conjunction with other technical indicators and news analysis. Trading is a high-risk activity, and it's crucial to have a sound trading plan and risk management strategy. Never trade more than you can afford to lose, and always use stop-loss orders to protect your profits. In conclusion, AUDUSD is currently in a state of flux, with the price consolidating around the 0.6700 level. The recent bearish trend, driven by a potentially dovish RBA and a strengthening US dollar, could continue. However, we need to watch out for potential reversals. If the RSI dips below 30, it could signal an oversold condition and increase the likelihood of a bounce back. The daily chart indicates that the price could be consolidating before breaking out in either direction. The key to determining the direction of the breakout lies in the news and events that will unfold in the coming days and weeks. Keep a close eye on the latest economic data and central bank statements, as well as technical indicators like the RSI. Remember, trading is a dynamic game, and the key to success is to adapt to changing market conditions.